What's good, family? All is well with everybody out there. It's your boy DK, aka Smooth Kid, checking in this morning, man. A lot of different things going on with this market right now. A lot of news that's coming out. We definitely got a lot of manipulation that's going on, to say the least. Um, so I'm just checking a few parameters before we get to cooking. Trying to see what the market actually want to tell us, what it's trying to do. Yeah, click out. I know YouTube be tweaking. Make sure we can see. Uh, but yeah, um, yeah, we checking out, see what's going on for the day, man. You already know how we break this market down, top down analysis. Me first and foremost, you already know the first thing I'm going to be talking about is the dollar. Nothing moves without the dollar. We still the safe haven currency of the world. So at the end of the day, there's a lot of speculation that's going on about the dollar losing its reserve currency, which is, that some of that is true. Um, but as of right now, the dollar is still the guru of the world, right? When it comes to selling and trades, our dollar is used to settle trades all around the world. Um, in any market that you're partaking in when it comes to the barter system, right? At the end of the day, that's what we're partaking in, the barter system. And as global as the barter system is, from here all the way to Pakistan, you still are going to have, um, you still are going to have those dollars. That's going to be those transactions that's going to be settled in dollars. So uh, one of my main things that I'm going to talk about that I feel like has to be talked about before you get to starting into your trading day, you get to getting ready to size up the market and see whatever it is that you're looking for or you want to look for. I feel like the dollar plays a very important role to know where the dollar is trying to head to, right? And not only that, also adding to my arsenal when it comes to I'm also adding it to my arsenal when it comes to yields. Understanding how yields work. Understanding how we can also use yields to get a sense of direction of where we feel like the market is trying to go. Like I say, it's all about having that bias. It's all about having a fundamental sense of where you would like the market to go. Will the market actually make it to that where you want to go? Who knows, right? But you still want to have a bias. You don't want to get into this market and you don't have a sense of direction of where you understanding the market is trying to go, because you could be lost in the sauce. So you always want to approach these markets with a bias in mind, but you don't want to marry that bias, right? The market could change on for many different reasons. There are different catalysts that pushes these markets one way or the other, and it can almost, I mean, one headline can change the whole sentiment of what's going on currently in the market. So you want to be up on point on fundamentally what's going on in the news, what's going on in the world as far as current events. I remember when I was in college, the professor used to stress then, like the importance of um, being up on current news, or that goes for in the world and right here domestically in the United States. You want to be up on point on what's going on in the world, because that trickles down to your everyday life in one facet or another. So it's no different when we get into these markets, when we get into this game. We also want to be aware of the catalyst of the big headline, what's looming, what's being talked about, what's the rumor that's being whispered about. Having that fundamental um, edge will allow you not only to be able to, make good trades, but also just keep you in the know of what's going on when to hedge, or when there's manipulation being talked about, when they're telling you to look this way whole time they over here doing what they doing. Because this is what it's about in this game, is just the manipulation of it, right? One side wins, one side loses. You got a buyer and you also have a seller, and that's just how the game go. So when it comes down to this dollar, that's the first thing we looking at for sure, right? Right. We just had the stock market open, right? We've been open for about 4 5 minutes. So within them first 30 minutes, for me, I like to kind of sit back on my hands and see what the market is telling us, what the market is really actually trying to do. Because there's a lot of manipulation that's going on within the first 30 minutes of the opening bell. A lot of it. So some people love it though. Some people scalp their open. Some people love to scalp that volatility that the market brings when it first open. I'm not one of them, right? I'm more so of a swing trader. I like to let the entire move play out. I like to see the bigger picture. Nothing's wrong with scalping. I'm not knocking nobody for doing it. It's just not my style, right? It's just not how I like to approach the market. But um, right now, we got news that's about to come out, which I feel like is something that, when it comes to your fundamental analysis, is something you definitely want to be privy on. I think I should be showing the screen right now. Yeah, on the screen right now with the data that's for to come out. We got the Jolts job in the next 10 minutes. We got the manufacturing in the next 25 minutes. So at 9 o'clock candle, I say within the next 30 minutes, it's going to bring some heavy volume into the market. And for us traders, that's what we want. We want the volume. Um, we want to be able to get into our trades without slippage, and we want to be able to exit our trades without slippage. Well, DK, what do you mean by slippage? Well, basically, we are um, over the counter traders, right? We are retail traders. So most brokers that we're using um, are, they're not, I would say, like big gurus on the stock market exchange, or the forex market exchange. So these smaller brokers are, putting their trades into a liquidity pool as well, and so they're trying to get the best, most real time price that we can. Because trading view, even though trading view is, we everybody, we use that for look charts and technical analysis, but these charts that we're looking at are not per se like, they're real time, but they're not like real, like, you're not you're not getting that price that's reflected on our screen as fast as, let's say, um them down on the stock market floor themselves. They're getting that price way faster than we are. We're kind of, the data that we're getting, the data that we're trading is kind of delayed in that aspect. So um you definitely want that volume, right? You definitely want to be able to execute your trades. At the moment you push sell on your phone, you want to be able to get into price right then. The moment you push buy on your phone, you want to be able to get in the trade right then. The moment you close your trade, you want to close your trade, or be able to close your trade right where you're looking at it on your phone. You don't want to hit close on your trade. Like, for instance, price is at 97.55, and it closes you out at 97.44, right? Because the market is having what's called slippage, right? That's not something that you want. So you definitely want a lot of volume in the market when you get into trade. No matter what session it is, it can be the New York session, which is the session that we're currently in right now. It can be the Asian session. It can be the London. It does not matter. You still want the liquidity and that volume in the market. So right now, um, like I said, we got news coming out in the next 7 minutes, 7 minutes to the next 15 to 30 minutes. We got a lot of news that's coming out. I feel like it's going to kind of shape give us that catalyst that we're looking for to go ahead on and tell us where we feel like the market is, where its next objective is, right? Where is it trying to get to end today? If you don't know, Wednesdays are infamous for reversal days, right? They call them reversal days throughout the week. So we definitely want to be patient. We definitely want to, let the market tell us where it wants to go. You don't want to try to rush it. You don't want to try to lean off in it and you're trying to beat them out. Nah, we want to be patient. We want to be patient. We want to be patient and let the market tell us what it is that it really, really want to do. Um, so yeah, so right here on JPY, um, which is heavily correlated to the US to the dollar. It's various. It's a major pair. Super important to know what's going on with this pair when it comes to the global markets. I've been scoping it all week, um, and it just haven't been hitting. I mean, it's been hitting, as you can see, this trend line I just drew out on it last night. It's been hitting them trend lines. I mean, it's been hitting them trend lines on point, to say the least. So what I got right here drawn up is another trend line, and definitely one of the more known about technical analysis that a lot of people do use. So you kind of want to use that as a gauge of where you feel like the market could get to, and then you want to think like what they call smart money, right? You want to see where you feel like um, a lot of traders are going to be looking to take a move, and we want to kind of, I ain't gonna say be delayed on the move, but we definitely want to be patient. We don't want to try, like I say, we're not trying to, in a sense, we're not trying to beat them. We're trying to allow the market to tell us, hey, when the bulls step in or the bears step in, we want them to give us a signal that, hey, they finna take off. And once they decide that they're about to take off, we want to join the bus, the whale. We trying to jump on their back and ride it out. When it comes to us being retail traders, right? We, as retail traders, we don't control an iota in this market. We are reactionaries. We are the ones who are just trying to, in a sense, scrape up the crumbs that's out here, because basically that's what we control, crumbs, when it comes to the billions and trillions of dollars that's in these markets. But there's enough money and liquidity out here for all of us. There's enough money out here for us to get. So with this USD JPY, man, I'm seeing a trend line. Most, if you're going by textbook, right? Most of the times when you have a trend line like this that's been touched one, two, three, and potentially a fourth time, that fourth time normally it starts to get a lot weaker, right? We could possibly start to see that this trend start to break up from a technical standpoint. So I like to go in, okay, let me look at the yen pair itself, right? Let's look at the yen dollar and see what it's doing. And I noticed that it got down here to this little liquidity zone down here. So I've been patiently waiting to see its reaction. As you can see, it's just been dropping, right? Nothing goes down forever, nothing goes up forever. Eventually it turns around. And we're at a real critical point that I feel like we could start to see some upward movement from this area right here. And if we start to get some upward movement in this area, what we're going to see happen with USD JPY, we're going to continue to see it pull back. Now, how far it's going to pull back, where that's neither here or there. That's just, we just know that, okay, we are in confluence with what's going on. We see the dollar. I mean, we see the Japanese yen getting to a pivotal point, and then we see the USD JPY pair. Which, when you see when you looking at forex pairs, right, the pair on your left is going to be your base pair, right. The pair on your right is going to be the peg pair, right. Their currencies are always battling simultaneously. You got different countries that's doing different trading. You got different value systems that's surrounded around a currency. So that left side that you see, no matter what pair that you're looking at, that's the base pair. And here's the base pair with the dollar. So we don't have to necessarily look at the dollar, though it's already priced in, right? So we're looking at the yen and we're looking at this potential pair and we see where we could, like, okay, we're looking at a bias to see if this pair is going to get back down here to this trend line here. And then if and when it does, that can kind of shape our bias on what we would like to see it do. If you would like to see the Japanese yen gain some momentum and actually push back up from this area, well, that would go hand in hand with, like I say, USDJPY pushing back down to this area. Now, if we continue to see that, right, that is what we want to see as traders, right? So let's just say we continue to see USDJPY trend down, right? It's heading towards this trend line right here. Cool. Okay, what you want to see on the opposite side of that is the Japanese yen getting back up into this area. This red line up here is basically a key level, right? It was a support. You can see it came here, bounce, and then it broke, retested that support level, and dropped. Well, the market tends to, like I say, it's like a seesaw. It tends to go up and down. Nothing goes down forever. Nothing goes up forever. So as we seeing this possible um, reversal on the yen, as the yen trends towards this key level here, and we start to see the USD JPY trends down this level, that's exactly what you will want to see. Now, here's the key and important part about that, right? As a trader, when if that price approaches those levels, once price get to those levels, you want to be patient, right? Let the market tell you which way it wants to go. Once the market get there, let's say yen gets to back up here to this key level. Now we want to see if it's going to respect this key level and reject, or is it going to break this key level, break it, retest it, and turn this back into a support and get back up into this area. And the vice we want to see vice versa with USDJPY. And as USDJPY gets to this back to this key level, we want to see if it's going to do the opposite. If yen gets up there to that level that I was just showing you and it rejects and starts to pull back, and we here at that same time, then we know, boom, we can start to look for some loans from this area. If the yen gets up here and it breaks this level and it makes a if it breaks this level and it makes a pullback, makes a support, and we start to trend back up into this area, cool. Then we know one thing that's possibly going to happen with USDJPY as it pulls down here, right, and it breaks this level. We want to see we want to see it pull back. Start out with the tool. It gets to this level. What we want to see is, boom, it break this level, comes back to where this key level is. You see right here, same. That's literally the vice versa of what I was just saying with the yen. You want to see it come here, boom, and then we can start to look for shorts in this area to short it back down to this level that it keep previously broke and left from. And what we'll be looking for on the yen is to see it get back into this level, like I say, break, retest, and get back into this area. That is exactly what I mean by bias. When it comes to currencies and whatever potential pair that you're looking at, you want to have a bias, right? You want to look at the instruments single-handedly and line up key structure if you can. Is it gonna always be like that? Of course not. But when you have that different confluence, that is a strong confluence, that is a strong area, and that is a good area to use engage as where you're going to potentially look for buys and sell it because it's of the key levels in the area that is being respected. I mean, that is prime one-on-one what I just showed you on how the markets move, how to use your bias to um, get into trades. It's literally, that's it when it comes to the technical side. Now what we're looking for now, as I was just explaining, is let's see what the news tell us, right? We got the technical side down. Now we need the catalyst, right? We need the fundamental side of what's actually going on in the real world, like physical, what's going on, right? And these data points tells us what's really going on in the world, not speculation, not assumption, it's hardcore facts, which is what the market is really going to move off of. We can show all the technicals that we want. Does not mean that price is going to respect those technicals. Like I say, when I first started this, the catalyst can change at any moment. One headline could send these markets into a disarray. So you just want to have a bias, but you never want to marry that bias. Just what I just broke down, that's just a assumption of or area or where we would like price to go based off our trading style, right? Now we're going to look at the facts and see what the facts tell us. Then we're going to sit back and let the market react to those facts. Then let the market tell us what it wants to do, where it want to go, where's the liquidity, all of those things. And then after we get all of that checked off, now we go and look for a trade. Now we're going to look for our setup that favors our trading style. And if it might not come New York session, right? It might not happen. The setup that we want might not happen this session. It might not happen until we get in Asian session. It might not happen until we get in London session. So um having a bias is important and sticking to it. If price did not come to that area, price did not respect your bias, move on. You do not ever marry nothing in this game because things could change at any moment, any moment. So that was literally a one-on-one breakdown of how I gauged the markets, right, from a technical side of especially when I'm looking at yen and I'm looking at USDJP. When I'm looking at yen and I'm looking at the dollar, uh, you need that confluence. You have to have that confluence, not only from a trading aspect, but just from a knowledgeable when you because if you're a trader or you're a mentor and you constantly running into people who trying to learn from you, then I feel like you're doing them a disservice if you don't actually know the definitions of what you're actually trading. Just knowing the technicals is cool, but you should also love your craft enough to be able to want to educate people on what's driving these markets, the fundamentals behind these markets, because without that, them charts, them candlesticks don't mean shit. Um, and trying to, put yourself in a position to make it seem like technicals outweigh what's going on in the real world to me is just I don't respect that, right? So I like to give the insight on what's really going on, the fundamental side of trading, because you need that. You need to be on point, not just from a trading aspect, but in your life, right? Like I say, when you're talking and knowing how to move and maneuver in the real world based off what you already know is going on from an economic standpoint, because that's at the end of the day, without that, without having economic means, then we all know then you're in a totally different bracket. You get treated differently, like everything changes about your world. So being in the know, I don't feel like, I feel like that you're doing yourself a good service versus a disservice of not knowing what's really going on. So with the yen, like I say, we're starting to see the push up right now. We're about another few minutes before the news come out. Um, let's refresh it right quick to see if we okay. Okay, let's look at this news. We got unemployment, a non and NFP just came out, right. That's not good. You got PMI. I guess a little change, but I don't know nothing too drastic. Um, and then we got some more PMIs that's coming out in the next 7 minutes. But I'm sure that employment change is what the market is really going to be gauging right now. Then that is a nice little drop. Did not get to the forecasted numbers. So I'm sure the market is going to keep, uh, weighing that in or pricing that in already on a struggling dollar, a weak dollar sentiment. And you take that on top of weak employment. It's not a good recipe, right, for our dollar or our economy, which is going to continue to put pressure on the dollar and metals, commodities like gold as well. So yeah, that's the news on that right now. I'm looking at my charts right now, trying to see how the market's reacting to that news. We still got about 5 more minutes, and like I say, we was just talking about the Japanese yen is currently pushing up, and we still have the USD JPY pushing down, which is going in hand on what we was just talking about. So this is really going to be what I'm going to be paying attention to heavily going into the rest of the day. Uh, this move could possibly happen within the next hour or so, or it might take the rest of the day. But this the move that I'm forecasting right now with this USD JPY. I want to see it get down here and respect or disrespect this level, validate this level. I want to see what it's going to do when it gets to this area. Um, and I also want to see if the yen continues to push back up into this area of key level where it left. So a lot of patience that's going to be needed, and to see where I feel like the market want to head to before we try to execute on whatever trade that I potentially am looking at, or as far as timing. I'm gonna put it that way because, like I say, this might take an hour or two for it to get here, or it might take the rest of the day. The main thing is what I explained earlier is waiting till it get to this area and seeing how it's going to respect this area and how the Japanese yen is it actually going to continue to get back over to this area. We got the yields going up for the US dollar. So we're probably gonna have a little movement from the dollar. Check the VIX, all of these different little trajectories that just adds confluence onto what you're trading and adds, like I say, knowledge to what you are in line with what's actually going on out here in the economy. That's the main thing. Allows you to trade more, freely, right? You won't be feeling all anxious, and if you lose a trade, you won't feel bad about it, right? Because you did what your game plan told you to do, and that's at the end of the day, that's all you can do. We don't control these markets. We are just reactionary. So that's gonna be my little spiel, man. Like that's really what we're looking for. We got the news, like I said, we got this news that just dropped. So now we can just sit back and be patient. This is the one move that I am currently looking for. Like, I mean, you just got, it's got too much technical things that's look good for it to ignore it. It's just, push up 1, 2, 3. I mean, it's too many things to ignore, right? And could we be getting back into a bearish state? We very well could. We very well could. But I need signs. I need the market to tell me, show me that's where it actually wants to go. That's where it's heading to. Once it gets here, like I say, I feel like it's going to give us a great opportunity to get into a potential trade here, whether we see it push down and pushes back up, or we see it push down, break, retest this area, and then we push here. Either way it goes from these, we talking 40, 40 pips to the downside, or over 60, 70 pips to the upside, especially if we break higher. We have a, a heavy imbalance of pricing in USD JPY that I could see us very, very getting back up into this area to close that inefficiency. So I like the potential move on USD JPY. I really don't want to short it. I'm not a shorter. No, that's not. I'm not a good shorter. I'm gonna say I'm more so of a buyer. So me personally, I want to see it get down here and push back up. Honestly, I don't want to see it break the trend line. I want to see it continue with the trend line. Normally, not a trend line trader, right? Don't normally do a lot of trend lines unless it's just too obvious to ignore. And this is one of those trend lines that's just too obvious to ignore. Drew this on the line chart on the 4 hour, so it's just too obvious to ignore. And what we want to see is, like I say, we want to see price get down here and see how it's going to respect these levels. And me personally, like I say, I want to see it get down here and boom, we can look to check this high out and continue up, man. So that's what I'm looking for on USDJPY, man. I say it's a lot of news just came out, man. Y'all stay on point on the current events, the catalyst, whatever news you watch. Me, I prefer Bloomberg. That's my go-to. But you got other news sources, MSNBC, Yahoo News. You got different avenues that you can check out that you might like. But me personally, I'm a Bloomberg guy, and that's how I keep up with a lot of my news. So find your news source, keep up with current events, man. Keep up with what's going on, policy changes, especially these EOs that Trump be dropping. Keep up with that, man. If you need, you know, if you're kind of confused on what's going on, what he actually saying, got all these different little AI joints that you can use, and you can type in, ask them to summarize the speech, or you can just drop it comment in the section of the video, man. Type in, I answer that at the best of my ability for sure. But being ignorant is a choice in my opinion. You have to ask questions in order to find out, you know, I answer. So that's gonna be my little spiel, man. Or till then, man, y'all be safe out here in these streets, man. For sure.